Waiting for a housing market crash could cost you. And before we get into the Florida housing market and talk about the Orlando, Sanford, Kissimmee Metro, we must understand that the key inflation gauge that the Fed tracks rose 0.3% in March as expected. As expected by who? Because my expectation is with all of the tightening and Big Papa Powell raising Fed funds rates, we should be seeing a decrease in inflation, right? Wrong. That's not what's happening because inflation continues to uptick. And inflation is cancer as it relates to economic growth and as it relates to the buying power for the consumer. And the consumer who is feeling pain right now hasn't begun to feel the pain yet because the economic cycle is worsening. And this isn't doom or gloom, this is reality. Layoffs are happening and they are going to get worse. And big corporations, including some of these tech companies who have enacted massive layoffs and cut spending across the board, they've stopped spending like a drunken sailor as it relates to growth, as it relates to buying new buildings, and they're tightening their bottom line across the board by selling anything that doesn't benefit their shareholders. And yet, we still got inflation going higher. And while the annual rates are below the peaks that were hit in 2022, they're still well above the central bank's 2% target and further evidence that price increases are proving stickier than policymakers had anticipated. And keep in mind, these inflation numbers are total bullshit. They are not accurate. They're actually much higher. But since March of 2022, the Fed has raised its benchmark interest rate 9 times for a total of 4.75 percentage points. And you can bet your sweet bippy that Big Papa Powell, who's already told us what he's going to do, is going to approve another quarter percentage point increase at next week's meeting before it pivots to see the impact the policy tightening is having on the 26.5 trillion US economy. And while a reasonable person might expect, hey, Big Papa Powell, why don't you wait a month or two? Because it takes time for these interest rates to impact prices across the board, especially in housing. But he's not doing that. He continues to raise at a breakneck pace. And banks are failing, and the system is at risk. And there are lots of banks and institutions and corporations that are in big trouble based on these rate hikes. Which takes us to the Orlando, Kissimmee, Sanford Metro. We're talking about Lake, Seminole, Orange, and Osceola County. We're talking about Central Florida. We're talking about a region that is directly under attack by Ron DeSantis because Disney World is located there. And his fight against Disney could have a crippling impact on the economy of Florida and certainly on the housing and economic conditions that exist within these metros. And while I do not agree with woke ideology or pushing a woke agenda at all, I also don't agree that going after Disney the way that he's going after Disney is the right move. And although I understand that negotiation is a game of brinkmanship, I don't believe that the way he is going about this is in Florida's economic best interest. And while it's yet to be determined how this will play out, I absolutely know that Walt Disney was a genius and negotiated an incredible deal for himself and for his company into perpetuity based on the market conditions of when he did it. And he got incredible tax benefits and he gained tremendous control. And while I'm certainly an advocate of everyone paying their fair share, and it's probably right to reconsider and renegotiate some of what those terms are, going about it the way that they're doing it right now is probably not in the best interest of Florida. Yet to be determined, I don't know. It can't be ignored. And while there are many folks out there that think that Ron DeSantis is likely to be the next president, I believe that he has gone so ultra far right in terms of some of his policies, I don't believe he's even electable. And I hope he comes back to center and starts applying common sense because some of the policies that he is endorsing are plain stupid. And to be clear, some, not all, because his policies and his leadership during the pandemic differentiated Florida and protected Florida and allowed Florida business and Florida homeowners and Florida citizens to benefit tremendously. While much of the rest of the country failed miserably, which is really just a long way of getting to. I don't agree with all of his policies, and I don't agree with the way he's handling Disney right now. But many of his policies and much of his leadership has been incredibly positive. And he has certainly earned Realtor of the Year award in many of the last few years. But less politics, more numbers, because the data, unlike politicians, does not lie. And as of March 2023, closed sales are down almost 18% in the Orlando Kissimmee Metro. Cash sales are down 40.6%. Both median and average sales price are on the uptick. Median sales price jumped from just under 410 to just under 421, up 2.6%. Average sales price jumped from 482 and change to 500 and change, up 3.7%. Dollar volume took a hit of 14.8%, but that's a function of closed sales being down 17.9%. Percent of original list price received took a hit to down 3%, 97% from a high of 100, which to be clear is not too far off from 100. Median time to contract, a return to normal from 70 days to 31, up 342.9%, and time to sale also on the uptick, 64.3%, 42 days up to 69. New pending sales down 20.3%. New listings also down 20.3%. And we're going to get granular into what the new listing supply looks like. And we're also going to get very granular into the unsold homes sitting on the market because the supply side in Lake Orange, Seminole, Osceola County, in the Orlando, Kissimmee, Sanford Metro has exploded. And we need to know what it looked like in the past in order to have historical perspective. But pending inventory is down 16.7%. And to be clear about what that means, that's talking about homes that are on the market under contract and the active listings. The inventory of homes sitting on the market unsold has exploded, up 107.5%. There were 2,443 homes sitting on the market unsold in March of 2022, and that number is now north of 5,000. 5,069 homes are sitting on the market unsold in the Orlando, Kissimmee, Sanford Metro. Great news if you're shopping there, not so great if you're thinking about selling. And that translates into a month's supply of inventory uptick of 186%. 2 months from less than a month, zero point 0.7 to be exact. To be clear, that is a seller's market. But buyers have far more leverage, far more supply, far more choices, and I suspect that number is going to skyrocket as the economic conditions worsen. Which takes us to the median sales price history to get some context as to what the changes are in March relative to pre-pandemic. And what you can see is that in the Orlando, Kissimmee, Sanford, single family homes, Metro, median sales price is on the uptick 2.6%. And to be clear, it's up 5% for the year. But 2.6%, as you can see over the last 12 months, is the slowest appreciating month that we have on record. But what does that look like in historical context compared to 2019? And if you look at the bottom bar graph, you can't help but notice, although we're at 420, which is not the high of 431, which we had in May of last year, you can't help but notice we're not too far off what the all-time high is, which is a far cry from what it was in 2019, where you could purchase a single family home in the Orlando, Kissimmee, Sanford Metro for under 300,000. And at one point in 2019, if we go back to January, you could probably buy a single family home somewhere closer to 275. Massive uptick in equity for homeowners in this region over the last few years, which is why I suspect it's going to take a long time for distressed sales to have any type of meaningful impact on prices in this market. But yet to be determined, I don't know. This is simply historical context going back to 2019. And average sales price tells us a very similar story, although the figures are going to be a little bit higher because average sales price includes all values, not just the middle term. So, what you'll notice is that March 2023 is a 3.7, almost 4% uptick in average sales price for the Orlando Kissimmee Sanford Metro. Year to date, it's up 6.5%. But if you go back in history, you'll notice that 3.7 is a lot lower than 14, 17, which is almost 18, 16, 20, 20, and 20. It's not the same breakneck pace of appreciation. It's a return to normal. And I suspect that we will see single digit growth in most markets within the state of Florida. But I do know there is massive pricing volatility when you get into the hyper-local markets that you may be shopping in or thinking about buying. And I am committed to sharing exactly what's happening in each hyper-local market within my market and every metro within the state of Florida. So if you are looking to buy or sell anywhere in the state of Florida and in need of hyper granular information, please reach out because I will provide it to you right away. But you can't help but notice that year to date, we're up 6.5%. And for March, the average sales price was 500. Year to date, it's 505, just under 506, which is a far cry from the touch over 300K that the average sales price was at the beginning of 2019, which again confirms what everybody already knows. Homeowners are sitting on a metric shit ton of equity. But I think it's very instructive to understand what the supply side looks like because supply and demand will always dictate price. And new listings are in short supply. March, a deficit of 20.3%. And year to date, there's a deficit of almost 20%. And if you look back down over the last 12 months, you're going to see short supply to the tune of double digits almost across the board. Not exactly, there was an uptick in different months, but for the most part, there is a short supply of new listings, which obviously impacts the supply of homes. But if we try to get some historical perspective relative to pre pandemic numbers, you can't help but notice, although we are at a deficit in March and year to date, if we go back to 2019, what you can't help but notice is this market, in terms of supply of new listings, is returning to normal. And although the supply side in January was a little bit higher, it's a far cry from the 4,000 plus homes that were being listed in May of 2019. But new listings only tell you half the story as it relates to supply of homes that are sitting on the market unsold. And although there is a short supply in terms of new listings, there is a mass supply of active listings sitting on the market unsold relative to the last few years. And if you look at where we're at today, up 107.5% in terms of inventory sitting on the market unsold, there's 5,069 homes sitting on the market praying for an offer. And year to date, that number's up 121%. 5,287 homes are the monthly average year to date. But to gain historical perspective and gain some context, right now, although we are on the uptick in terms of active inventory, we're nowhere near where we were in 2019. Although the trend is not your friend, and I suspect we'll get there soon enough. But in 2019, there were over 8,000 homes, which is a far cry from the 5,000, which were sitting on the market unsold in March. But if we analyze it a little bit further and get some better context as it relates to new listings by initial listing price, you can see what the breakdowns are for each price point in this market. And you can't help but notice that there is a short supply of new listings in homes that range from 150 to just under 200,000. There's a short supply of homes for sale that are being listed in the 200 to 250,000 price point range. From 250 to almost 300, short supply of 38.3%. 300 to just under 400, short supply of 28.5%. 400 to 600, short supply of 12.2%. 600 to just under a million, short supply of 16.3%. Up until you get to $1 million or more. And at that price point, in that luxury bracket, there's an uptick of 3.5%. But to be clear, it's only 238 new listings. And while new listings certainly tell half the story as far as supply is concerned, inventory by current listing price gives you far more context, because the inventory of homes sitting on the market unsold in the Orlando, Kissimmee, Sanford Metro in Osceola County are on the uptick exponentially. And although there was a decrease in homes sitting on the market unsold between 50 and under $100,000, that was down 44%. And to be clear, these are homes you probably don't want to buy in the first place unless you are a very specific type of buyer. Every other price point is on the uptick exponentially. 150 to 200,000 up almost 13%. 200 to just under 250 up 8%. 250 to 299 up 6%. But this is where the numbers really go up fast. And these are the homes that I suspect most of the viewers who are watching this channel are looking to buy in the first place. $300,000 to $400,000 homes have upticked 143%. There are 1,113 homes sitting on the market unsold in March of 2023. There are 1,825 homes between 400 and under 600 homes sitting on the market unsold in this metro, which is an uptick of 140%. 600 to just under a million, there are 1,114 homes sitting on the market unsold, which is an uptick of 130.2%. And while those are the price points that most buyers are shopping in, make no mistake, $1 million plus buyers are getting hit too. If you're thinking about selling $1 million home, you've got to be aware that there is a heck of a lot more inventory sitting on the market unsold. Up 76.6%, 581 homes that are priced between $1 million and infinity are unsold in the Orlando metro, which is great news if you're shopping for a home in this market, and it's not so bueno if you're thinking about selling. Which takes us to distress sales in the Orlando, Kissimmee, Sanford Metro, which again is Lake, Seminole, Orange, and Osceola County. And distress sales were absolutely the thing that rocked the market when the market crashed last time. And different than last time, homeowners, which mostly have much more skin in the game from a financing perspective, are sitting on a metric shit ton of equity. So it is very unlikely that they wouldn't just sell with whatever the market bears rather than going into distress and being foreclosed on or doing a short sale. But make no mistake, when the pain of recession gets bad enough and enough folks refuse to pay their mortgage, these things are going to happen absolutely 100%. But as of March 2023, distress sales are a non-event in this metro, although they are on the uptick. So foreclosures are up almost 19%. There were 19 versus 16, and short sales are up 50%. There were 2 in March of 2022, and there were 3 in March of 2023, which is not statistically meaningful for the state of Florida at all. And I've already covered Florida in its totality in another video, which you're welcome to watch at the end of this one. But for now, distress sales are a non-event in the state of Florida, up until they are. Now, I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up, share it with a friend, be on the lookout, because I fully intend to cover every metro that exists within the state of Florida, so you know the most actionable information and can make the best decisions for yourself, for your family, and for your financial bottom line. If you're even thinking about buying or selling anywhere in the state of Florida, please reach out directly, because we would love to help. And check out my next video, because I suspect you'll love it a lot. And until next time, peace.